A trial balance is a bookkeeping worksheet in which the balance of all ledgers is compiled into a debit and credit account column total that are equal. A company prepares a trial balance periodically. A trial balance consists of cash, inventory, accounts receivable, sales, and more. Once the accounts are posted, you will see the account title, debit, and credits posted in the sheet. The major sections in a trial balance are the income statement, balance sheet, statement of cash flows. The normal accounts posted in a trial balance are assets, liabilities, equity, dividends, revenues, and expenses. An adjusted trial balance is an internal document that posts all ledger account titles and balances after adjustments have been made. The purpose of the adjusted trial balance is to prove the equality of all debit and credit account columns after account totals after their balances. The 4 examples of adjustments are accrued revenues, accrued expenses, deferred revenues, and deferred expenses. The next step after the adjusted trial balance is to complete the financial statements. The 4 financial statements from the adjusted trial balance are the income statement, statement of shareholders' equity, the balance sheet, and the statement of cash flows. Income statement starts with the sales, then you will subtract cost of goods sold and the operating expenses, which consists of payroll, sales commission, and more. At the bottom of the statement, you will have all other expenses. Once everything is added and subtracted, you will have the net income for the period. After the income statement is complete, we will start the statement of shareholders' equity, which starts with the common stock for the period. You will then add the net income from the income statement, and then you will subtract your dividends for the period. You will be left with your total shareholders' equity. Next, you will move on to the balance sheet, which consists of 2 parts. They are assets and liabilities and equity. Assets are broken into current assets, which consists of inventory, accounts receivables, and more. Property, plant, equipment consists of things like buildings. On the liabilities and equity portion, you'll have the current liabilities like accounts payable, notes payable, and more. Long-term liabilities, which are anything long-term, and then you will have equity, which will consist of common stock and retained earnings, which is your net income minus the dividends paid out. The assets and liabilities and equity should equal out or something was done wrong. From the balance sheet, you will complete the statement of cash flow. The statement of cash flows consists of cash flows from operating, cash flows from investing, and cash flows from financing. Cash flows from operating consist of cash received from investments, rent paid, and more. Cash flows from investing consist of purchasing or buying land or anything that will invest in the company. Cash flows from financing consist of issuing common stock, adding and subtracting all that would provide us with the net cash flow for the period. Thank you for watching.